Next, we're going to look a little bit at buy now, pay later models, which have continued to thrive in recent years. We are going to hear from two of the sector's leading companies on how the vertical has developed, where it goes next, and how it helps consumers manage their finances. Speaking with Alex Marsh, Head of Klarna in the UK, and Michael Saadat, Head of International Public Policy at Block, who's joining us all the way from Australia, please let me welcome Sharon Evans, General Counsel at Totally Money. Please welcome her to the stage.
Oh, there is heaps of water here.
Straight in. Okay, hi, welcome everybody. I really thought the old library was going to be a bit more intimate than this, but anyway, nice to see everybody. So this session is focused on buy now, pay later services, and specifically the regulation of those services in the UK. I'll pause in case anybody wants to run out, having heard the word regulation. I'm joined by Michael Saadat of Block and Alex Marsh of Klarna. We only have 20 minutes today, but before we dive in, could I ask you both just to do a quick intro, please?
Thank you, Sharon. So Michael Saadat, I lead international public policy at Block. Block is the owner of Repay, which is the leading buy now, pay later business in the UK, and a number of other business units, including Square, Cash App, Afterpay, and Tidal.
I'm Alex Marsh. I head up the UK business at Klarna. I've been closely involved in the development of regulation in the UK for buy now, pay later. So yeah, really happy to talk about that today, Sharon.
Thank you. I'm here to facilitate. I'm Sharon Evans. I'm General Counsel at Totally Money. We don't operate directly in the BNPL sector, but we provide free credit reports, and we've been looking with interest at the recent rollout of BNPL account data across credit reports. So I think it's important first just to set the scene quickly before we dive in. Just make sure we're all aligned on what we mean by BNPL when we talk about it today. We're talking specifically about interest and fee-free short-term loans that are used to spread payment for retail goods, because I know BNPL is a broad church and encompasses a lot of different services, but we're talking about the arrangements that currently today operate under a regulatory exemption, provided that they are interest and fee-free, repayable within 12 months in 12 or fewer instalments. So today, thanks to the exemption, lenders offering those services do not need to be FCA authorised, and those contracts with customers are not regulated credit agreements. What's coming is a seismic shift in regulation. I don't think that's a spoiler. The exemption will be amended so that BNPL providers must be FCA authorised, and the agreements with consumers will be regulated and treated broadly in the same way as such as credit card agreements. So that's just to make sure we're all aligned on what we're talking about here. Alex, if I could come to you first, could you give us a sense then of how big this market is and who's using it and how fast it's been growing?
Yeah, I mean, it's been quite phenomenal growth over the past couple of years, particularly, I think, off the back of the shift to e-commerce during the pandemic, and then we're seeing even more so now with the cost of living crisis and people looking for alternative ways to pay, lower cost ways to pay. I think from a sort of size of market, it's estimated around a third of the adult population in the UK have now used buy now, pay later, so approaching 20 million adults. It's still often the perception of users of buy now, pay later is that they are kind of Gen Z or millennial shoppers for fast fashion, but actually that's broadened right out now. So the average age of a user in the UK is around 36 years old. It's continuing to trend towards the average age of a typical e-commerce shopper in the UK, which is roughly 40 years old. Buy now, pay later available across, it's estimated across over 30,000 retailers in the UK, so very much kind of ubiquitous in terms of its availability. And that's both now online and then increasingly in-store as well for a bricks and mortar. So kind of incredible growth in terms of adoption. In terms of estimating sort of as a percentage of e-commerce, in the UK around 8% of e-commerce payments are made using buy now, pay later, still dwarfed by credit cards, which around a quarter. Interestingly though, from our home market at Klarna, so from Sweden, we've actually seen that shift now. So buy now, pay later actually has overtaken credit cards. It's around 25% of payments in Sweden is made on buy now, pay later. Credit cards have dropped to 17%. So you've seen that kind of shift, and very confident that that shift will be coming through to the UK. I think a really important part when you talk to the cost of living crisis, fundamentally these products, focusing particularly on the interest-free buy now pay later products, they're importantly saving people money right now. They're giving flexibility, but saving them money. And credit cards, as an alternative, high-cost alternative, charged over £6 billion worth of interest to consumers in the past year. And I'm pleased, our business and others here in the audience, doing their bit to chip into that. We're seeing already over £100 million worth of interest has been saved for consumers by switching across to buy now pay later, and confident that that will continue.
So we're talking about considerable market here. So I gave a snapshot earlier, but Michael, would you mind giving us sort of more insight really into the regulatory development so far?
Yeah, we've been on a bit of a journey here in the UK. Just over 2 years ago, there was a review by Chris Woolard of the buy now pay later sector, and that review recommended that buy now pay later be brought within the scope of regulation. As you mentioned, that we be FCA authorised and subject to provisions within the Consumer Credit Act. But importantly, that review and the Treasury response found that buy now pay later needs to be regulated in a proportionate and sort of tailored way, and we strongly support that. We think having the right regulation for this sector is really important for consumer confidence and for consumer protection. We think some of the proposals that have been consulted on, have really good elements in them. Probably get into some of the concerns we've also got with some of those proposals, but we think regulation is a really important thing, and actually the industry has been very supportive of having regulation in place. I think the thing we all agree on is that regulation does need to be fit for purpose, particularly when you're starting from a foundation of consumer credit legislation that was introduced in 1974 in the UK, and even in other countries where you have consumer credit legislation, it predates the existence of these products and the way these products actually work.
Yeah, and that's the thing. The exemption was, I think, for invoice deferral or something. It was just never intended, was it? I mean, as with so much of financial services regulation, the products have fast outpaced the regulation. So we should get into the meat of it then. It's been a couple of years in the making, as you said, so there has been time to discuss the proposed legislation. But what are your concerns, if I could ask you both, what are your concerns about what's in there?
Okay, first, so I think, as Michael said, there are many things which we really welcome in the proposed regulation. So things like false complaint rights, Section 75 protection, and ensuring that a customer has the same protections, whichever credit product they choose in the checkout. So I think that should be acknowledged that there are some really strong elements to the proposals. I think when you zone in on some of the areas of where we have concerns, I think in particular one is that piece around elements of the existing, what we see as outdated prescriptive Consumer Credit Act regulation being carried across and applied to these products as part of these proposals. And I'll bring to life one example. One would be around credit agreements. So currently if you are choosing to pay in a checkout and you choose to pay with a credit card, it typically takes around 30 seconds, it's kind of estimated. If you use buy now, pay later, there is a bit more friction, so it can take maybe between a minute and a half to apply. We already offer regulated credit products in the UK, so we're well aware of what the requirements for credit agreements, what that would mean for the journey. We've modelled that, and it's looking like the journey time could increase to over 5 minutes potentially based on the existing provisions. Now, the sort of unintended consequence of that is such disproportionate friction. The same friction you would expect, and rightly so, for if you were purchasing a car, for example, on finance over 3 or 4 years. But we're talking about 75, on average, £75 loans over 30 to 60 days. So I think when you look to the unintended consequences of some of those proposals where you're bringing outdated prescriptive requirements across these new products, is in reality, sadly, you're likely to then push people back to these high-cost credit options that they're trying to get away from. So I think that's one piece where we're really trying to focus our efforts to bring that to life, to make sure that's understood and we don't drive through potentially unintended consequences to poorer outcomes for consumers. And fundamentally then contrary to things like the consumer duty that we're also investing a lot of time and effort in right now.
And do you think, sorry, Michael, just to elaborate on that, so do you think then, is what you're looking for some kind of tiered approach so that value would dictate the level of friction?
We've looked at, there are other areas in the proposal which are really sensible where they're looking at a more tailored approach or a move across to sort of FCA rules rather than prescriptive CCA requirements. So pre-contractual information would be an example of that. So actually, recognising these products are different, they're being used in a different way for lower value short-term lending, I think it's really important that then you go to a tailored approach. And I think there is the potential, and it has been considered in the previous consultations, to go to a more tailored approach, which then is more proportionate to the inherently lower risk nature of these products.
Yeah, I would echo what Alex has said, but also add that, certainly we agree with a lot of what Treasury has consulted on. I think fundamentally things like the Financial Ombudsman Service are probably one of the most important consumer protections you can provide consumers, and we strongly support that being put in place. To add to what Alex said, I think the other thing that we think is really important is having a level playing field when it comes to buy now, pay later regulation. There is a diversity of products, but ultimately, we have got an industry that has products that look quite similar and work in quite similar ways. As is currently proposed, Treasury's proposal would not extend to buy now, pay later arrangements that are provided by retailers directly. And we know there are some very large retailers, some very large tech businesses that have the capacity to offer buy now, pay later services to their consumers directly. And we just don't think it makes sense to exclude those from the scope of regulation. Other jurisdictions, the EU has considered this issue and is applying regulation to retailers, Australia and New Zealand in the same way as well. So we think this is something that can be solved. Treasury has acknowledged that it's a gap at the moment, but we do think it's an important gap that needs to be closed before the proposals are finalised. It's consumers don't distinguish between buy now, pay later that's provided by the kind of website that you would shop on versus buy now, pay later that's provided by a third-party provider.
I think that I completely agree, and actually I think it risks with that current proposal undermining a lot of the efforts in the broader regulation in terms of continuing to build that, drive that confusion in consumers as to which, what product gives what protections. So you've got that scenario where you could go into a bricks and mortar shop where they're offering, Klarna or, Clearpay as one option, but they're also offering their own solution, which is, 12-month interest-free product. You have certain protections for this product, you don't have protections for that product, which I think then drives more confusion and then continues, unfortunately, to kind of give leverage to incumbents who, frankly, have used the regulatory standing of these products over the past couple of years as a stick to beat these products, where in reality they should just be focusing on their own products and improving the quality and service offering of their existing products.
And it's already confusing for customers with things like Section 75 that can be eroded depending on the way in which you make the payment. So, yeah. And you touched earlier, Michael, on the other jurisdictions that you look at. So globally, I mean, where do you think this leaves the UK if everything goes through as we saw in the last government consultation paper? Is the UK still an attractive place for BNPL providers?
Yeah, it's a good question. I guess the UK got off to an early start in looking at these issues. The Woolard Review was the first real sort of report that identified the need for regulation and that the regulation should be proportionate. I guess it's taken some time to get to where we are now, and other jurisdictions have caught up. So Australia and New Zealand in particular are also in the process of deciding how to implement regulation. I think in those other jurisdictions though, and Europe as well, what we're seeing actually is regulation that does reflect how these products actually work, rather than trying to make them fit within a regulatory model that is quite outdated. So I think part of the challenge in the UK is that you have within the Consumer Credit Act this distinction between fixed sum agreements and running account agreements, and that is probably quite an antiquated construct actually that doesn't work in the context of these products. And so if you're trying to force a BNPL product into one of these constructs, it's not an ideal outcome, and I think that, frankly, that's a challenge that Treasury has to solve. We think the buy now, pay later is probably a hybrid of these two types of categories, and so getting the settings right is quite important. I think I would say that the UK still has an opportunity to really lead in this space. It's seen as a very critical jurisdiction when it comes to regulation of fintech, and I think the opportunity is there to kind of lead in a way that demonstrates an ability to be agile, responsive and flexible when it comes to regulation, and also think about the broader regulatory context as well. Alex mentioned the consumer duty. Having outcomes-focused regulation is really critical. I think regulators have increasingly recognised that providing consumers with disclosures doesn't actually achieve good outcomes, and actually the products have to be designed in a way that meets consumers' needs and gives them a simple, fair and transparent product to use. And I think these are the hallmarks of our products ultimately. Consumers love them because they're simple, they're free, they're transparent, in some ways, possibly less flexible than a credit card. You know, you can use a credit card wherever you like, and you can make very low minimum repayments over a very long time. So there's a lot more flexibility with a credit card, but actually consumers are rejecting that model because they know that it traps them into interest rates of 20% or more over a very long period of time. So I think the outcomes are really important, and I think having regulation like the consumer duty that's focused on outcomes is going to be critically important.
Yeah, there's a lot going on at the moment with the CCA reforms and the consumer duty as well. And I guess with consumer outcomes as well, do you think that the approach so far will achieve one of the stated aims of consumer protection? So thinking about the things that Woolard raised as kind of risks of customer harm, from affordability to transparency over late fees and that sort of thing. Do you think that
I think, to be fair, I think there's been so much progress in those areas already over the past couple of years. I think the really positive piece you've seen from providers in the UK is that they haven't waited for the regulation, and Chris Woolard was always very clear at the time. He said, in many of these things, you don't need to wait for regulation. So I think there have been improvements in the checkouts, in the marketing, the progress working with the credit reference agencies to address the visibility issues. So actually, I think there's a lot to be kind of recognised for progress. I think, interestingly, part that often gets missed is like these products already are delivering better outcomes for consumers. So I think it brings confidence in terms of the consumer duty, in terms of you're already seeing lower missed payments typically on buy now, pay later because of the dynamic underwriting, rather than underwriting once with a credit card and then letting a consumer operate using that card and their circumstances can change. You're seeing lower complaints with buy now, pay later products. So actually I feel very confident that sort of transition to regulation, if the regulation is sensible and proportionate, should be relatively seamless, and will continue to support that journey of the shift in consumer preference that we've touched on.
Okay, so I think we're down to final thoughts now. Alex, this is very broad, but what lessons do you think can be learned from the process that the industry's gone through on the BNPL regulatory sort of journey?
Yeah, so I'd have three really quick lessons. One would be, I think we've learned from this the damage that a lack of regulatory certainty can bring. So when fintech disruptors are looking to invest and looking to innovate, regulatory certainty is helpful. Then what the rules are that you're operating within, and you can really push the boundaries to drive the best outcomes. So I think trying to drive towards greater regulatory certainty is really important. I think the second piece is that piece around a move away from prescriptive regulation, actually, and I think to outcome-based regulation. I think some of the lessons from this is that if we'd had a more outcome-based approach already, it could adapt to new products like buy now, pay later, whereas what we're trying to do now is essentially sort of square peg round hole territory, because we've got the prescriptive rules that don't really fit the product. So I think, again, a general piece there, which is positive, we're moving in the right direction with consumer duty. And I think the last piece would be around, still my lesson and experience has been many policymakers, regulators haven't actually used the product, which is, which is frustrating, because then what, they're basing their decisions on is what they're reading in the media, what they're hearing from lobbyists, typically from incumbent banks, rather than actually experiencing the product and the benefit it brings. So I'd really encourage, for me, a lesson from this is, for regulators, policymakers, is to use the product, really immerse it and understand the benefit and the value that it can bring to the consumer.
Yeah, no, totally agree with all of that. I think, the UK has the opportunity now to really step back and reflect on where the settings are going to be put and made. And I think, in the context of everything else that's going on, making sure that we get the right regulation is going to be critically important. These products are here to stay. They've become absolutely mainstream for consumers. Consumers have embraced them and love them. And I think having regulation that actually works in the interests of consumers, rather than working actually in the interests of, other sectors which might be challenged by some of these products and the competition they bring, I think is really, really critical. And I think we're looking forward to the ongoing engagement with policymakers here.
And will it all be in place by the end of this year, do you think?
It's a great question. We think so, but there's a lot to get through.
We'll leave it on a cliffhanger. Okay.
Thanks, Sharon.
Thank you.
Thank you.
Thanks, everyone. Thank you.